Good morning. This is Chairman Heath Tarbert. This meeting will come to order. This is a public meeting of the Commodity Futures Trading Commission. The meeting will be held via conference call in accordance with the agency's implementation of social distancing due to the COVID-19 pandemic. I'd like to welcome members of the public and market participants who are on the phone or streaming this meeting through our website. I'd also like to welcome my fellow commissioners who are also participating on the call. Commissioner Quintens, Commissioner Benham, Commissioner Stump, and Commissioner Berkovitz. This should be one of our shorter open meetings, I suspect. We assembled today to consider a single item, which is a final rule prohibiting certain statutory qualifications for commodity pool operators, which we call CPOs, who are claiming registration exemptions under our Rule 4.13. At the outset, I'd ask for the cooperation of those who are speaking in the meeting to remember those few simple tips. When you're about to speak, please ensure your line is unmuted. Identify yourself when you are speaking, and then when you're not speaking, if you could keep your line muted. We'll now move to opening statements in order of seniority. Commissioners are free to reserve their time to make a longer closing statement if they wish. I'm going to actually reserve my remarks for the discussion of the rule itself, so I have no opening statement. I'll therefore go ahead and recognize Commissioner Quintens.
Good morning, Mr. Chairman. Thank you. This is Commissioner Quintens. I appreciate the hard work of the staff and DSIO in particular with all the rules that they've been bringing before us recently, and in particular this rule on statutory disqualification issues for exempt commodity pools. As some may know, I had a registered commodity pool and ran that, and therefore have a keen interest in ensuring that those that qualify for exemptions do so appropriately, so that we can ensure that the investment interests of the public that have those opportunities also have the protections that they rightfully deserve. So with that, Mr. Chairman, I think I will also reserve the majority of my time to have a little bit of a further discussion during the rule consideration. And thanks again to the team.
Thank you very much. Commissioner Benham.
Good morning. Thanks, Mr. Chairman. This is Commissioner Benham. Good morning to everyone at the Commission and my colleagues, as well as to those in the public who are able to join us this morning. I won't have much to say in my opening statement, and like Commissioner Quintens and yourself, Mr. Chairman, I'll reserve comments for the Q&A period. But I do want to thank DSIO staff, Josh Sterling, Elizabeth Groover, and Amanda O'Lear for their work on this. And I'm going to be pleased to support the final rule today as an important one that we did propose a while ago and sort of broke off from a larger proposal, but it's an important customer protection rule that's important for sort of our regulations, CPOs generally, and the investing public to ensure that they know who they're investing with and where they're putting their money. So I look forward to today's meeting, and thanks again to everyone for their hard work.
Thank you so much, Commissioner Benham. Commissioner Stump.
Thank you, Mr. Chairman. I, too, plan to reserve most of my comments and questions until after the staff has had an opportunity to present the rule before us today. But I did want to take the opportunity in my opening comments just to simply acknowledge the emotional toll that the recent events are having on our country and offer a sincere hope that we will emerge from this time with a greater resilience and a better communal understanding. We are very fortunate to live in a true democracy. In the United States, we enjoy certain freedoms, and within that democracy, and as children, we are explicitly taught that our First Amendment protects the freedom of speech. Today, I'm reminded that to realize the intended benefit of our freedoms, there are also certain obligations required of us. The obligation to listen and the obligation to show respect. As citizens of the nation, we should fulfill our obligation to hear all views and also to respect the property and the service of others. At the CFTC, we are a body of vastly different views, and we receive input from each other and varied stakeholders. But to fulfill our obligation to preserve our democratic system, we have to listen and respect one another. I feel like we do a lot of that well here at the CFTC, but this is a time to recommit across all aspects of our lives to these obligations. I am today reminded that we are stronger as an agency and as a country when we not only listen but hear each other. And it is easier to hear one another through respectful dialogue. We all must dedicate ourselves to being part of the solution. Racism, violence, and disrespect are at odds with our societies and the obligation to preserve democracy. With that, I'll turn it back to you, Mr. Chairman. Thank you.
Thank you very much, Commissioner Stump, and I'm sure we all agree with your sentiments. Commissioner Berkovitz.
Thank you, Mr. Chairman. This is Dan Berkovitz. Mr. Chairman, shortly after becoming chairman of the CFTC, you started a new practice where we begin our public meetings by saying the Pledge of Allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. We recite the pledge and then move on to consider the pending commission business. Today, though, we should pause before we move to consider the pending business. Cries of anguish, anger, and protest ring out from cities across our country because for too many Americans, particularly Black Americans, there has been too little liberty and too little justice for far too long. As a nation, we have not fully lived up to the words in the pledge. Today, we should consider this too. We should begin by asking ourselves, why have we not achieved liberty and justice for all? How can we work together to achieve it? And then we must renew our commitment to achieve it. Before we started saying the pledge at open commission meetings, the last time I had said the Pledge of Allegiance was in Mrs. Farrell's 6th grade class at my elementary school in West Lafayette, Indiana. Every morning, Mr. Heath, the school principal, would read the pledge over the loudspeaker, and we would stand at our desks, hand over heart, facing the flag in front of the classroom, and say it along with him. Back then, I said the pledge because I was told to, and everyone else was saying it. But I didn't fully understand it. The word indivisible confused me. I thought it had something to do with invisibility. We did not spend any time talking about the pledge or what it meant. When I learned that we would be saying the pledge at our commission meetings, I remembered elementary school and the words came right back to me. But this time around, I didn't want to say those words just because an authority was prompting me to say them or because it would look bad if I didn't. I thought about what it means to say those words and what those words mean to say. We pledge allegiance not only to the flag as a symbol, but also to the republic for which it stands. A defining feature of this republic, a unique experiment in the history of nations, is that we are not just one nation, as stated in the pledge, but we are one nation of many people. Our national motto, E pluribus unum, means out of many one. No matter our race, religion, national origin, sex, or other orientation, we are all Americans. Our diversity makes us stronger. We must remain committed to advancing that diversity. The pledge also embodies the fundamental principles of our republic of liberty and equality under the law. Francis Bellamy, the author of the original pledge, explained why he chose the words liberty and justice in the pledge. Quote, liberty and justice were surely basic, were undebatable, unquote. So what does it mean to say those words? A pledge is defined as a binding promise or agreement to do something. Saying the pledge is not just a show of patriotism or of respect for the flag, but rather is a binding promise, a commitment to the underlying values of our republic. When we say the pledge, we are promising to make the words in the pledge a reality. We are making a commitment to achieve liberty and justice for all. Although we have been making this promise since we were school children, and generations of school children before us have made this promise as well, this promise has yet to be fulfilled for all people in this nation. We are seeing yet again the tragic consequences of failure to live up to this promise. The promise has gone unfulfilled for far too long. As Martin Luther King Jr. wrote from the Birmingham jail, justice too long delayed is justice denied. When we say the pledge, we cannot just say the words. We must renew and strengthen our commitment to liberty and justice for all. Today, I renew my pledge of continued support and commitment to liberty and justice for all. Thank you.
Thank you so much, Commissioner Berkovitz. Before I move on, I would like to just say that I'm very grateful for those words, those passionate and inspiring words. I did start the pledge at our open meetings for precisely the reasons that you stated, and of course I learned it also, I think, back in kindergarten, and then throughout my years as a Boy Scout, we said it at every meeting, and I because we weren't together physically and we didn't have a flag for these calls, I said, well, I guess we'll move forward and we'll reserve the pledge back for when we're all together again. But your inspiring words today have got me thinking maybe we should go ahead and continue to start with the pledge, even if we're working remotely and we're doing these meetings via conference call. So I do thank you so much for those words, and I think it's incredibly important that you shared with your views with us today. So thank you so much. I don't know if any other commissioners would like to say anything before we move on to the agenda of the Commission's business today. Okay, well, with that, staff will make a presentation on the Commission, to the Commission on the final rule before us today. After the presentation, the floor will be open for questions and comments from each Commissioner. The Commission will then vote on the matter. All final votes conducted in this public meeting will be recorded votes. The results of votes approving the issuance of rulemaking documents will be included with those documents in the Federal Register. To facilitate the preparation of the approved documents for publication in the Federal Register, I'd now ask the Commission to grant unanimous consent for staff to make necessary technical corrections prior to submitting them to the Federal Register.
So moved. Okay.
Without objection, so ordered. Okay, at this time, I'd like to welcome the following staff for their presentation on the final rule prohibiting certain statutory qualifications for CPOs claiming registration exemptions under CFTC Rule 4.13. From the Division of Swap Dealer and Intermediary Oversight, we have Josh Sterling, Director, Amanda Lear, Deputy Director, and Elizabeth Gruber, Special Counsel. I will now hand it over to the DSIO team for your presentation.
Well, good morning, Mr. Chairman. Good morning, Commissioners. This is Joshua Sterling, the Director of the Division of Swap Dealer and Intermediary Oversight, DSIO. It's a pleasure to be before you again, as we were last week, today to consider one rule. As we did last week, I will hand over the presentation to the excellent team here on our world-class division, who was responsible for getting this rule done for us. I think they've done a terrific job under challenging work circumstances. I think it will further our goal in the division of having a smart, effective, and practical approach to oversight of our registrants, and in this case, firms that are not registered. So I think that is very important, and I agree and share the sentiment that as this rulemaking will demonstrate, indeed, the rule of law in a just system is the greatest surety of liberty for all, and in this case, fostering investor protection in our markets. So without further ado, I will hand this over to Elizabeth Gruber, who was our point person on the rulemaking.
Good morning, Mr. Chairman and Commissioners. Thank you, Josh, for that introduction. Just to confirm, this is Elizabeth Gruber, and I am a special counsel in the Division of Swap Dealer and Intermediary Oversight, or DSIO. Before we begin, I would like to recognize and thank for their efforts colleagues in my division, as well as in the Commission's offices of the General Counsel and the Chief Economist. Their support and assistance throughout this process has been integral to the development and completion of the final rule under consideration by the Commission today. This final rule will, if adopted, amend the notice requirement currently housed in Commission Regulation 413, a provision which establishes multiple exemptions from registration as a commodity pool operator, or CPO, for qualifying persons and the exempt commodity pools they operate. Effectively, subject to very limited exceptions, the final rule will prohibit from claiming a CPO registration exemption any person who has or whose principals have in their background a statutory disqualification listed under Section 8A2 of the Commodity Exchange Act, or CEA. Specifically, the amendment by this final rule will require any person filing a notice claiming a 413 exemption to represent that neither the claimant nor any of its principals has in their backgrounds a statutory disqualification under CEA Section 882 that would require disclosure if the claimant sought registration with the Commission. The Commission originally proposed this amendment in November 2018, along with several other Part 4 amendments, the majority of which were finalized by the Commission in late 2019. Staff in the Commission's Division of Swap Dealer and Intermediary Oversight has since reviewed and considered all public comments received in response to this proposed amendment. In developing the final rule, DSIO staff thus targeted its efforts on producing a regulatory amendment that clarifies and ultimately narrows the scope of statutory disqualifications generally prohibited and exempt CPOs, that takes advantage of the existing regulatory structure by adding the prohibitive mechanism as a new representation in the notice requirement already present in Regulation 413B1, and that applies to the exempt CPO population in a manner that furthers the Commission's interest in providing some level of customer protection to exempt pool participants, while still recognizing the unique regulatory status and generally smaller commodity interest footprint of exempt CPOs and their exempt commodity pools. With respect to implementation, DSIO staff further recommends that the Commission offer guidance in conjunction with the final rule that would provide persons currently claiming a 413 exemption with additional time to file a notice containing this new representation. Under that guidance, such currently exempt CPOs would be required to first file the notice, as amended by the final rule, in March 2021, when they would otherwise already have to annually affirm their continued qualification and reliance on their 413 exemption. This approach was recommended by commenters, and DSIO staff agrees that such currently exempt CPOs should be permitted to continue operating their exempt pools in the interim as they identify and investigate the backgrounds of the exemption claimant and/or its principals. DSIO staff believes that providing this guidance will facilitate compliance with the new representation, thus furthering and supporting the Commission's customer protection interests, but also mitigating the costs or business interruptions potentially resulting from the amendment. As a result of the final rule, persons claiming an exemption from CPO registration will now generally be required to meet substantively similar basic conduct standards as persons registered or required to be registered with the Commission as a CPO, i.e. that they are not statutorily disqualified under CEA Section 882. Correcting this regulatory inconsistency in the manner recommended here today may increase overall investor confidence because it will set a standard applicable to the vast majority of exempt CPOs operating exempt commodity pools. Moreover, DSIO staff expects that once the new representation is fully implemented, both prospective and actual participants in exempt pools may experience enhanced customer protection due to the removal of statutorily disqualified CPOs and/or their principals from the commodity interest market. For these reasons, DSIO staff recommends that the Commission approve the final rule and amend Regulation 413 accordingly. I would now be happy to answer any questions regarding this final rule amendment from the Chairman or Commissioners. Thank you very much.
Well, thank you very much. This is Chairman Tarbert. I want to thank Josh, Amanda, and especially you, Elizabeth, for that excellent and informative presentation. To begin the Commission's discussion and consideration of this rulemaking, I'll entertain a motion to approve the final rule prohibiting certain statutory disqualifications for CPOs claiming registration exemptions under CFTC Rule 4.13.
So moved.
Second.
Thank you very much. I'd now like to open the floor to commissioners to give statements and ask questions. I'll start with my a couple of questions, and then I'll just sort of briefly summarize why I'm going to be supporting the rule. And I think I just have one question really, which is if a person seeking to operate a commodity pool under 4.13 does have a statutory disqualification in his or her background, is there any procedure for them to him or her to seek reconsideration of the prohibition that we're voting on today, to go to sort of a process point of fairness?
Yes, this is Elizabeth Gruber again. So the Commission has the authority under Regulation 412A to exempt any person or any class or classes of persons from any provision of Part 4 if it is found that such relief is not contrary to the public interest or the purposes of the provision from which that relief is sought. And the Commission has further, by rule, delegated that authority to the Director of DSIO. So DSIO staff would expect persons seeking reconsideration to request on an individual or firm-by-firm basis exemptive letter relief from the representation adopted by this final rule in reliance on that authority. To do this successfully, such persons would be required to present facts and a legal analysis demonstrating that the requested relief would be neither contrary to the public interest nor to the specific purposes of Regulation 413b1, which is to provide customer protection to exempt pool participants. This process would be dictated by the staff letter relief processes currently found under Regulations 140.93 and 140.99. And as a result, any responsive exemptive letter drafted by DSIO staff would be subject also to Commission review on an absent objection basis, consistent with other requests for exemptive letter relief.
Well, thank you very much, Elizabeth. Really helpful. Again, this is Chairman Tarbert. I am very pleased to support this final rule. Why am I supporting it? Well, I think it's pretty straightforward. Robert Louis Stevenson once said, "Everybody sooner or later sits down to a banquet of consequences." And today, of course, we're focused on consequences of bad acts that result in statutory disqualification under the Commodity Exchange Act. And so, obviously, if someone has committed the most serious types of financial crimes, embezzlement, theft, extortion, fraud, misappropriation, you name it, they shouldn't have a right to necessarily register with the CFTC, and they don't under our statute, but it seems rather odd that we would have a situation where they're not allowed to register, but at the same time, they can become exempt and they can enjoy an exemption, and it puts investors potentially at risk. So what we're doing today at a high level, just to frame it, is we're basically closing a loophole for bad actors. And I think that's entirely consistent with what I've said in one of our strategic goals of the CFTC, which is to be tough on those who break the rules. So my first point is that's why I'm voting for this. I also want to take an opportunity to point out, wherever I can, how unique the CFTC system of regulation is, whether it's sort of our focus on principles-based regulations and the right blending of principles and rules. One of the other aspects of our regime that I think is really important is the robust regime of self-regulation that underpins our federal framework. And so really what we have is we have the CFTC that administers the CEA, that has a number of principles-based and rules-based regulations, but we also rely on self-regulatory organizations such as the exchanges, but also, most importantly, particularly when it comes to individuals and market participants, on the National Futures Association. They're one of the pillars of our self-regulatory regime in the derivatives market. And this is a rule that the NFA has been advocating for quite some time. And this is just one of the countless actions that I think demonstrates the NFA's commitment to the integrity of the derivatives market. So I would take an opportunity to thank the National Futures Association. And then the third and final thing I want to mention is a few months back, we adopted a final rule that excluded family offices from sort of our registration regime as CPOs. And 4 out of the 5 commissioners voted in support of that, in large part because the Dodd-Frank Act excluded family offices from the definition of investment advisor, and our regime is essentially mirrored on that. And the way I look at that is simply that if our regime is designed to protect, third-party arm's-length investors, and if you're rich enough to have a family office, I'm not sure that working class and middle class taxpayers should pay for the CFTC to try to protect you when you don't want our protection and you're not seeking our protection. So I look at it in a very practical standpoint. But that said, others on the commission, my friend and colleague Commissioner Berkovitz, disagreed with that, and I think articulated very well his reasons for voting against that. That said, in recent weeks, Commissioner Berkovitz and I have had the opportunity to discuss this provision and our mutual support for this provision, but he rightly pointed out that while family offices may be excluded from CPOs, we also need to understand, are there family offices out there with bad actors who have violated the most serious types of financial laws, such that they would be disqualified if they were in our regime. And so based on those very constructive conversations, I am announcing today that I'm directing DSIO to undertake a special call for family offices to really understand whether we have bad actors out there. And the reason I'm doing that, and I think it's a very important one that Commissioner Berkovitz and I discussed, is that while we don't necessarily need to register, let's say, these family offices to protect them from managing their own money, if some of these bad actors, if there are bad actors and they engaged in, let's say, crimes and malfeasance against the market, spoofing, things like that, then they are out there and they have the potential to impact other third-party investors who are not related to their family offices. So we want to get a handle on that. I thank Commissioner Berkovitz for the robust discussion that he and I have had in recent weeks. And so that's the third thing that I'm announcing, a special call by DSIO. With that concludes my remarks. Again, I really thank Elizabeth for her work on this, as well as everyone else on the DSIO team under the leadership of Josh and Amanda. I'm pleased to support today's final rule, and with that, I will turn it over to you, Commissioner Quinten.
Thank you, Mr. Chairman. This is Commissioner Quinten, and thank you, Elizabeth, for the very solid presentation, and to Amanda and Josh for their work on this rule. I'm pleased to support today's final rule, amending the procedures for certain CPOs to claim an exemption from registration. It's sound policy to prevent a firm from claiming a registration exemption if the entity or its participants are statutory disqualified under Section 8A2 of the CEA, when those same disqualifications would prevent them from fully registering with the Commission. The disqualification applicable under today's amendment covers some of the most serious offenses under the Act, including fraud. And while an exempt CPO is more limited in its activities than a registered CPO, for example, no exempt pool can have more than 15 participants, or the CPO's commodity interest activity has to remain below certain initial margin or notional amount thresholds, an exempt CPO still manages money for investors. I therefore agree with today's amendment that the firm should be held to one of the most fundamental customer protection standards under the CEA. And I thank the Commission staff for their work on this rulemaking, in particular for their very thoughtful responses to issues that have been raised by commenters and my office. And I have no questions for the team. Thank you very much, Mr. Chairman.
Thank you very much, Commissioner Quinten. Commissioner Benham.
Thanks, Mr. Chairman, and thanks again to the team for your work on this. Thanks for working with my office. There's a bit of dialogue going back and forth, and I think the things I requested were accepted, and I appreciate DSIO for that. Also want to recognize Commissioner Berkovitz and Mr. Chairman, your work on the family office. I appreciate that. I support that wholeheartedly. I think that's an important sort of element of this rule, ensuring that we have comprehensive, inclusive rule set that does not leave anyone out, regardless of whether or not it's a family office or a regular CPO. I just have two quick questions, and I do have a statement that will be posted to the website very shortly. So my full concurrence, as I said, I'll be supporting this final rule today, will be posted on the website. But just to follow up, Mr. Chairman, your question about the 8A2 statutory disqualifications essentially not being an absolute bar to registration or availing oneself of the exemption. Elizabeth, if you don't mind, just a little bit of a follow-up, because you very comprehensively explained the sort of process under 4.12. If in fact an individual is able to avail themselves of the exemption, regardless of the fact that they have something on their record that's included in the 8A2 statutory disqualification, will that fact or something in their record be posted? And we mentioned the NFA, the National Futures Association. They do have a database that's available for folks to look up. Will that fact, specifically the individual having a statutory disqualification on their record, be made available to the public to sort of review and find out?
Thank you, Mr. Commissioner. This is Amanda O'Lear. I'm going to take your question.
Thanks, Amanda.
Sure, no problem. So, if this is addressed via a letter that's submitted pursuant to the procedures under 140.99 and 140.93, both requests and the responses from the division are made public on the Commission's website. And the public would be aware of any requests, including who submitted the request, and the division's response as to whether we denied that request and the grounds for doing so, or if that request was granted. So all of that information would be made available.
Great. I appreciate that.
Mm-hmm.
Can we quickly pivot to, and I know this was not discussed in the presentation for reasons that I'll say, it's not in the final rule, but 8A3, obviously a sort of parallel provision to 8A2, which is what the focus of the final rule is. But 8A3, just for the public, and Amanda, help me out if I missed something here, but it's essentially a similar provision within the Commodity Exchange Act regarding statutory disqualifications, but it provides a hearing for the individual essentially to discuss the issue. Can we talk a little bit about that? That was in the proposal. It's not in the final, which I'm comfortable with. But if in fact there was an 883 statutory disqualification, would a person claiming exemption from registration under 413 need to disclose whether the Commission had in fact barred the individual from registering pursuant to the hearing procedure under 8A3?
So again, thank you, Mr. Commissioner, for that question. So we made the determination after the review of comments and internal discussions, both within DSIO and with our colleagues in other offices. The bar is intended to be limited to 8A2. And so because 8A3, if there was a determination made pursuant to the procedures in 8A3 that a person was barred from registration, that would not necessarily bar them from operating an exempt commodity pool, in part because we made the determination to really focus, I think as the chairman appropriately characterized it, on those most fundamental offenses that are listed in 8A2. And so a person who has been found to have a violation under 8A3 would in fact be able to continue to operate a 413 exempt commodity pool.
Okay.
Mr. Commissioner, this is Director Sterling. I will add, sir, that the judgment to which Amanda referred reflected essentially a balancing act of practical economy and sort of taking due notice of the comments as well as the statutory distinction procedurally between 8A2 and 8A3. To put it in the vernacular, with 8A2, you're clean out. With 8A3, there is a process. And if we're talking about efficiently administering an exemption which permits a de minimis degree of trading in our markets, while we want to support investor protection, we've decided to focus our undeniably limited resources on excluding from the market those people that, as Heath has said, the chairman has said, are the worst of the worst. That's the decision we made.
Yeah. Appreciate that. And thanks to both of you for answering that question. And, we do have to allocate our resources to the extent we need to focus our energies on what's most important to protect customers. But, it's a reminder that we are extremely important agencies that has a huge responsibility, and that we have to meet these expectations, and we need to do whatever we can to fulfill them the best way we can. Last question, and it's a general question, and it kind of feeds into what I asked originally about disclosures, but I just kind of want to take a step back and have a very high level question. Just very generally, if a customer or member of the public looks up a CPO or one of the principles of the CPOs in the NFA basic system, will the existence of an 882 or 883 statutory disqualification appear? Because this kind of, for me, this goes to the heart of, our disclosure protocols and ensuring that the public, as they are listening to this or as they read about this meeting, will be able to identify these particular bad actors easily so that they can make the best and most sound investment decisions.
Thank you, Mr. Commissioner. So this is Amanda O'Leary again. So currently on NFA's basic, there are disclosures about proceedings that both NFA has brought, that the Commission has brought against a particular entity or person. I believe there are also listings for actions that are taken by other DSROs. We intend to engage in discussions with NFA as to including information, in particular when an exempt CPO has written in for relief and has received relief with respect to an 882 violation under 413, to include that information as well in basic.
One thing I would add too as well, Mr. Commissioner, if we're talking about a commodity pool that would do a de minimis amount of trading, and it stands to reason, and we haven't researched this, so this is not a market survey, sir, that perhaps a significant portion of the trading by the fund would be in securities, and there we're buttressed by the bad actor prohibition, so the firm might be clean out. In addition, I would say, just from experience, when you're talking about raising funds for a private investment fund, there are institutional investors that take exacting due diligence standards, including looking themselves into the backgrounds of the organizers of the fund, the CPO in our parlance. And there can also be aggregators of smaller investors that nonetheless qualify, including private wealth platforms sponsored by major banks that, for those more dispersed or smaller individual wealthy investors, will run the traps and do due diligence as well. That's not a complete bulwark, but we are operating in a context that has established pathways and other rules that would be designed to make investors aware of bad actors.
Thanks. I appreciate that. I agree with you. But again, that should not, and I know you don't believe it, or you feel this, Josh, but we can't rely on others, even though whether it's in the private sector institutions or our sister agencies are doing their share, we're all doing our share, but we have to focus on even that, what today's effort is, in fact, and I think the chairman said this, is an effort to close a loophole, something that I think we all agree. I assume we're all going to support this. I've heard at least of three here that this is a small loophole that we need to close. It's important for customer protections, and you need to make sure that despite other private market participants or the public sector agencies are doing their share, we have to be very laser focused to ensure that every investor has the right level of disclosure and the right level of access to information so that he or she can make the most informed decision. So again, agree with your sentiment, and I think we need to continue to work with our colleagues, the NFA, the SEC, our registrants, to ensure that we're doing everything comprehensively to provide the most information to investors so that they can make the most sound decisions. And that includes both these 882 and 883 statutory disqualifications. These are important bits of information that has been said before earlier today, that investors should know about as they make their investment decisions. So thanks again to Josh and Ben and Elizabeth, especially for your presentations. And again, I look forward to supporting the rule. Thanks, Mr. Chairman.
Thank you very much, Commissioner Benham. Commissioner Stump.
Thank you, Mr. Chairman, and thanks to the team, Elizabeth, Amanda, and Josh. I know this has been a long process, and I'm very grateful to all of the efforts you all have made to get this rule to its final form. I will have a full statement posted on the website, but just a couple of points I'd like to make now. As you all know, I continue to believe that one of the great strengths of our derivatives market is their the dynamic nature. And these markets are constantly and often rapidly evolving in terms of the scope of products and the platforms on which these products are traded and the participants that trade them. And as a result, one-size-fits-all rules often turn out not to be a good fit. Throughout its history, the Commission has utilized carefully crafted exemptions to smooth the sometimes rough edges of these regulatory obligations so that it fits the dynamic of the derivatives market. These exemptions help us to adapt our rules to the realities of the marketplace. But being exempt from certain regulations does not necessarily mean being outside the Commission's regulatory framework altogether. An exemption is a privilege, not a right. Our job as commissioners is to see that the exemptions we provide are appropriately tailored to fulfill the specific purposes for which they are adopted, while not undermining the agency's ability to fulfill its obligations under the Commodity Exchange Act. I believe that the final rule we are considering today strikes the right balance. It provides that the serious statutory disqualifications that are listed in Section 882 of the Commodity Exchange Act and that can preclude a commodity pool operator from registering with the Commission can similarly preclude the commodity pool operator from acting in an exempt capacity under Rule 4.132. I was hoping that you guys could expand a bit on the types of offenses that are statutory disqualifications under Section 882 of the Commodity Exchange Act, and that could prevent someone from being an exempt BPO or principal thereof under this final rule.
Yes, so this is Elizabeth. I can go ahead and give you a brief list real quick. 882 offenses include any felony convictions in the last 10 years that involve embezzlement, theft, extortion, fraud, and misappropriation of funds or securities, among other types of financial crime and misconduct. And additionally, there, I think, also permanent bars to registration or other major, let's say, offenses or investigations or findings against a person from an exchange or a different SRO or DSRO. But importantly, it's the ones that involve embezzlement, theft, extortion, fraud, and misappropriation of funds, that kind of thing that we were really focused on trying to remove from the exempt BPO population.
Right, thank you. So some very serious offenses is what we're talking about here. I just wanted to lay those out in a public forum for the benefit of the public. And I was also hoping you could walk through the rationale for not excluding registered investment advisors that are registered with the SEC from this rule. I think some commenters ask us to do so, and I appreciate the dialogue I've had with all of you with regard to that request and the action we took, and so I was hoping you could walk through that as well.
Sure. This is Elizabeth again. So staff reviewed the statutory disqualification regime in the Investment Advisors Act of 1940, the Advisors Act, and we concluded that it differs materially from the corresponding provisions in the CEA. Of particular relevance to this final rule, the Advisors Act does not actually specify any statutory disqualifications that would serve as a bar to registration for investment advisors in a manner similar to that of 882, meaning without a required procedural hearing or order. That equivalent provision just does not exist in the Advisors Act. Additionally, DSIO staff consulted with our colleagues in the SEC's Division of Investment Management, and they also did not believe that requiring this representation would be problematic for registered investment advisors, and they further agreed that our harmonization efforts between our commissions would be most impactful when they are spent addressing specific compliance burdens or requirements, rather than in determining the general fitness or conduct standards for a person to act as a CPO, whether registered or exempt in our market. So for these reasons, staff recommends preserving the Commission's independent authority to determine which persons should be permitted to operate commodity pools subject to a regulatory exemption like Regulation 413. This approach is consistent with that used by the Commission in performing an independent assessment of any registered investment advisor seeking CFTC registration. Under those circumstances, notwithstanding the investment advisor's registration status with the SEC, the Commission generally assesses the application of that investment advisor under the terms of the CEA and the regulations promulgated thereunder, which reflects the unique regulatory concerns presented by intermediaries acting in the commodity interest market. Although DSIO expects that most registered investment advisors would not at all really present any cause for reservation in our markets, we do believe that retaining the authority to independently regulate or determine a registered investment advisor's fitness to act as an exempt CPO best serves the customer protection interests of the Commission. So that's why we went in that direction for this recommendation, but we really did give it a lot of thought.
Right, thank you. And I know you all did give it a lot of thought, and you spent a lot of time talking with all of us about it, and I very much appreciate that. So thank you for walking through it. And just one final question. Am I right that not all participants in exempt commodity pools necessarily meet the test of financial sophistication that are recognized in our rules, such as accredited investor or qualified eligible person, for example?
Yes, that is correct. Under the exemptions available both in Regulations 413A1 and 413A2, those exempt CPOs may solicit and admit retail persons as participants in their pools because those exemptions have largely operational conditions that do not speak to the financial sophistication of the investors, but they rather focus on the number of participants in the pool or the amount of gross capital contributions or how many pools you're operating, but nothing in those two paragraphs speaks to financial sophistication. So yes, you are correct.
Okay, thanks for walking through that as well, because I know it is my belief that the sophisticated market participants should be able to enter into prudent business arrangements that they deem most appropriate for their operations and business needs, but not all participants in exempt pools under Rule 4.13 will have that same degree of financial sophistication. And for me, this is critically important in establishing the need for today's rule. In any event, drawing boundaries is at the core of our regulatory function, and I'm very comfortable drawing a boundary such that persons or entities that have, for example, had prior registrations revoked or been convicted in the past 10 years of a felony involving fraud or misappropriation of funds may not offer themselves as an exempt CPO to clients. Under our rules, a pool operator that believes its particular facts and circumstances make such a result unjust may request relief on an individual basis. I therefore support today's final rule, and I want to again thank the staff of the Division of Swap Dealer and Intermediary Oversight, the General Counsel's Office, and the Chief Economist Office for working with my office to answer our questions and incorporate our suggestions. Thank you.
Thank you very much, Commissioner Stump. Commissioner Berkovitz.
Thank you, Mr. Chairman. This is Commissioner Berkovitz. I also would like to start off by acknowledging the work of the staff and your leadership on this issue, Mr. Chairman, and the support by my fellow commissioners for a rule, as has been noted, you noted in your opening statements, and other commissioners have noted too, really closes what could be considered a loophole in that persons that could not register or were prohibited from acting in a registered capacity due to a statutory disqualification for a serious offense of various financial and market and other statutes, conduct, very serious conduct, could do an end run around that and say, well, I can't get registered, but I can operate in an exempt pool. And this closes that loophole or that hole. And I think this is a very positive rule, very much in the public interest. And so I want to thank you and thank the staff for drafting a good rule in that regard and working with my office very constructively on our comments to make the rule robust and well drafted. I think also, Mr. Chairman, you very adequately explained the issue that you and I have discussed on a number of occasions, and the approach forward on that issue, and that's of the family pool. That's the family pool issue. And through our successive rulemakings on this, the family pool, for the reasons that you've noted, I think you accurately stated the issue regarding family pools is, on the one hand, there are these large, sophisticated investors. They don't, perhaps one view is that they don't need the same customer protection as the ordinary consumers. They're big persons. They can take care of themselves. On the other hand, some of these offenses that we're talking about are not just consumer protection offenses, but they involve really serious misconduct against the market, and unleashing these people on the market through family pools could pose a risk to the market. So we don't necessarily want to give them free hand or free rein to do that as well. And you outlined that issue pretty well, Mr. Chairman, and the approach that we're going to take, or that you've determined to take and issue a special call, I very much support that. But we're sort of here at this place on this rule. Family offices, through the prior rulemakings and the origination in the Dodd-Frank Act, they would be treated differently at the SEC space, and then we harmonized. We're to a point now where family offices, with the passage of this rule, will be exempt from our regulation, exempt from providing notice of the exemption, which is what I objected to in the last rule. And this rule gives them the third exemption, so to speak, and that their operators aren't subject to these same statutory disqualification provisions that all other pools are. So they're exempt, and we don't know who they are, and then we don't know anything about their pool operators, and the same restrictions don't apply on them. I don't want to condemn all family pools or persons who operate that, or cast aspersions on them. But first thing, it's important to note that these are not, when we talk about family offices, that name conjures up like mom and pop operations that somebody, maybe have an office to the side of their farmhouse where they manage their, the commodity investments or whatever. But that's not the case anymore. That may, at one point in time, have been a proper characterization of family offices just managing family money. But family money has grown considerably, and as I explained in more detail in the last rulemaking on the notice issue, these are really the guidebook to family offices says you really need about $500 million to operate one of these things efficiently, and they're large, very large private wealth vehicles, and so they can have a significant market presence. I don't think just because you're wealthy that the people you're a sinner, but necessarily you're not a saint. I think it's inappropriate to classify people according to their wealth. I think people are people, rich people, poor people, whatever. But I don't think they're necessarily worse. I don't think they're necessarily better. I don't think they necessarily deserve less oversight in that regard. But we don't know. We don't know who's operating these pools. And so I think it makes sense. Let's get some data on it. Let's do a special call to find out who these CPOs are of these family pools. Has this been a magnet for people who are statutorily disqualified? Or maybe these pools have been doing a great job. Maybe they've been really sophisticated and say, no, we want to be upstanding citizens, and we're not going to take somebody with a taint in their background because we take our responsibility seriously. We don't know. I think the assumptions, it's just, we can't make assumptions one way or the other. That would be unfair. And so I think it makes sense. Let's get the data. Let's get the special call. Find out, do we have an issue of disqualified people in this space or not? So I just want to thank you, Mr. Chairman, for doing the special call and the staff. And I think we can, although we can debate the rationale for the way it is going forward. This is a way, I think, to make progress and give us some confidence in the integrity of our market. So I just want to recognize that effort and thank you for that. I just have a few questions, and some of them have been addressed in this regard, this additional procedure for getting the exemptive procedure that you've outlined, where you can send in a letter request for an exemption. I just want to clarify, right now, people who are statutorily disqualified in this space, in the exempt pool space, is it correct we may have two types of people who are, I think the rule text speaks of persons who with statutory disqualification in their background. And is that somebody who actually has been disqualified by NFA under a proceeding, or does it also include persons who have committed an 882 offense who would have to disclose that? Where do they apply for NFA for registration? Does it include both types of persons that this rule would encompass?
Thank you for that question, Mr. Commissioner. This is Amanda. It would encompass both persons who have a finding in their background, either from NFA or through a commission process, and it would also encompass those persons who, should they apply for registration, they would be required to disclose such a violation.
What is the instances, so let's take in the space somebody who actually hasn't been denied registration but is operating the exempt space, who if they were to apply, would have to disclose this. Do people who disclose this, does NFA ever allow them to operate, or is this something that's an automatic, no, you can't do it? Do you know what's the NFA's approach on this?
So this is Amanda again. Thank you, Mr. Commissioner. So my understanding is based on a review of NFA's registration program that I was part of at least 10 years ago at this point. But my understanding is that the process remains the same, is NFA has a particular team of staff who, when a registration application comes in on the 7R and 8R, that discloses statutory disqualifications. Those disqualifications, those applications are flagged for those staff. Those staff then engage in an in-depth review, fitness review, and it parallels what process the Commission would engage in if the Commission had not delegated this authority to NFA. NFA does an in-depth review of all of the facts surrounding the statutory disqualification. If it is appropriate, they will deny the registration application. Otherwise, they also have the authority, commensurate with the authority that the Commission has, to impose any restrictions or limitations on that registration in order to mitigate the risks posed by that statutory disqualification.
So when we established our procedure for applying for an exemption, let's say to a person, well, what case would be a person who is actually subject to an NFA, who couldn't have NFA's denied a registration to because of statutory disqual, and then they get flagged in this rule, and then they could apply to us to an exemption basically from that. That's what this would prevent.
They could apply to us for an exemption. Yes, this would prevent that precisely. This would prevent them from then applying for a registration exemption. Yes.
No. Sorry. This permits or prevents them applying to us for a registration exemption. Where if they've already been denied by NFA, the exemptive process that that were explained in this rule, does that permit them then to come to us for an exemption after they've been denied or not?
Okay, sorry. I just want to make sure I understand your question, Mr. Commissioner.
Yeah.
So we have a person who would like to operate a commodity pool. They have applied for registration. They've gone through NFA's process. NFA has determined that they are not an appropriate registered CPO and has denied their application for registration. If they were to then attempt to operate as an exempt CPO, under the current rule, they would be able to do so.
Right.
This final rule would prohibit them from doing so unless they were to, again, come in, submit a request for an exemptive release consistent with 14099 and 14093. They would have to make the argument that it is in the public interest and that it does not undermine the purposes of the Prohibition on Statutory Disqualifications under 413 that we're considering today. To my mind, it seems an unlikely result that they would then get the exemptive release, but that would be the process.
Right. Mr. Commissioner, I just want to add as well that in my experience, NFA has a registration system and an exemption system. They administer both for us in a way that tracks our registration rules as well as our exemption rules. And so if through the registration process you were determined to be statutorily qualified, that would be on the record in the system for NFA, so to speak. If that same person were to go and try and file an exemption then with NFA, that information would be there, would be ascertainable, and I think would similarly stop them from what's essentially an effective on filing exemption from going into effect. And then they would have to come to us to follow the process.
Right, thank you for that clarification. And then coming to us, they would be disclosed if they wanted an exemption at the end. After that, come to us for this exemptive letter. They'd have to, for the factual basis, why, despite this prior NFA action, they should nonetheless be allowed. So it would be they would really have to overcome that prior determination and explain to us why, notwithstanding what the NFA has said, they should be gotten the exemption they're applying for. Correct? In the exemptive letter.
Yes, sir. That's right, sir. And they would go through a process identified in our rules, which is designed to provide them procedural protections. But it would be plain in the record the nature of the offense, the gravity of it, which could be embezzlement, theft, you name it. And then we'd have to assess as an agency the complete record, and that could go either way, I suppose. But yes, that's correct.
That would not be lightly done on our part. I'm sure, given if somebody had a very serious track record, and the NFA had said, no, we're disqualifying you. I mean, we respect the NFA's views on these things. I know. So okay, I appreciate that. And then the other situation would be that they're subject to if they were to, they haven't applied to the NFA, but they've committed one of these offenses that were they applied to the NFA for registration, they would have to disclose. And at that point, this rule will capture those people as well. Those folks have two options. One is they could go to the NFA and apply for registration. They'd have to disclose it. Or they could apply, I guess, for an exemptive letter from us, in which case they'd also have to disclose it. Correct?
That is correct.
So, and then our process is not this exemptive letter that we would issue. Again, it would be something like in that other case we were just describing, where if NFA already had, obviously the NFA wouldn't have already had done it, but we're not intending to have an end run around the NFA registration process in that circumstance, where it would be easier to get a letter from the CFTC than it would be to go and get straight up registered from the NFA. Correct?
That's right, sir. I mean, the way I think about it, the effect of this rule, if it's triggered by someone's history, will be to have fewer exempt CPOs rather than more. So yes.
Right. Okay. Well, I appreciate that. So that helps me understand the standard that we'll be using under the possible exemptive letter requests. So I appreciate that very much. And then so let me appreciate your answering my questions, and I'll just reemphasize it's a good rule, and I'm very happy to support it. And thank you for working with me and my office on the rule and on the special call. I think that's a sound way to proceed at this point. So thank you.
Thank you, sir. Oh, sorry. Thank you.
No, go ahead, Director Sterling.
Oh, no, Mr. Chairman, I was done. I was just thanking the Commissioner for his questions as well as his insights during our discussions. Thank you.
No, thank you very much. Thank you all. So with that, I think we've concluded our question period. So I will ask, is there any commissioner that is not prepared to vote? Okay, hearing none, it sounds like everyone is prepared to vote. So Mr. Kirkpatrick, our dutiful secretary, would you please call the roll for the final rule amending Part 4 of the Commission's rules?
Thank you, Mr. Chairman. This is the Commission Secretary speaking. The motion now before the Commission is on the approval of the final rule prohibiting certain statutory disqualifications for CPOs claiming registration exemptions under CFTC Rule 4.13. Commissioner Berkovitz.
Commissioner Berkovitz votes aye.
Commissioner Berkovitz votes aye. Commissioner Stump.
Commissioner Stump votes aye.
Commissioner Stump votes aye. Commissioner Benham.
Commissioner Benham votes aye.
Commissioner Benham votes aye. Commissioner Quintens.
Commissioner Quintens votes aye.
Commissioner Quintens votes aye. Chairman Tarbert.
Chairman Tarbert votes aye.
Chairman Tarbert votes aye. Mr. Chairman, on this matter, the ayes have 5, the noes have 0.
Thank you very much, Mr. Secretary. This is Chairman Tarbert. I'm pleased to announce that the ayes have it and the motion on the proposed rule is hereby approved. Before moving to closing statements, is there any other commission business for my colleagues? Okay, hearing none, I'd like to ask if any commissioners would like to make any closing statements. We'll proceed in reverse order of seniority. Commissioner Berkovitz.
Thank you, Mr. Chairman. I think we had a good pleased to support the rule today, and again, thank you for working with me and my office and Director Sterling and Amanda and team. Thank you very much again.
Thank you very much. Commissioner Stump.
Thank you, Mr. Chairman. I do not have any closing remarks. I just want to take a really quick opportunity to thank the folks on my team who've worked really hard over the past few weeks, as they would if we were in the office, but these circumstances make it all the more challenging. So I want to thank Dan Buxa, Libby Mastrozakamo, and Terry Arbert for all of their help. Thank you.
Thank you very much, Commissioner Stump. Commissioner Benham.
Thanks, Mr. Chairman. Again, thanks to the team, Josh, Elizabeth, and Amanda for your work on this. We're working with my office. Very pleased to support the rule today. It's an important element of our rule set, and I'm very glad we're able to do it well and do it unanimously. Also, I want to thank my team as well, John Duffy, David Gillers, and especially Laura Gardy for her work on this. And finally, Mr. Chairman, I just want to recognize and thank Commissioner Stump and Berkovitz for their statements at the beginning of the meeting. Certainly appreciate the sentiment shared about the importance of the Pledge of Allegiance, and in particular, the focus on each of the words that make up the pledge. And I thank you, Mr. Chairman, for bringing that to this agency. It's something that's very important that we do, and I look forward to continuing to do it in the future. That said, we need collectively to address systemic racial inequality in this country. These are certainly unprecedented and painful times. but we have to work towards forming a more perfect union, and it's woefully incomplete until these inequalities are eliminated. So I recognize that our work at the CFTC, although important, may appear to be removed from the challenges our country is facing today. These issues affect us all, and we have each of us has the responsibility to face these challenges and work towards addressing them in a very mindful and careful way. So, thanks, Mr. Chairman, for your support and for calling the meeting today.
Thank you very much, Commissioner Benham. Commissioner Quinten.
Thank you, Mr. Chairman. This is Commissioner Quintens. First of all, thank you to Josh, Amanda, and Elizabeth for your work on this. I, too, am very glad that this was another unanimous vote by the Commission and recognizes the hard work that the staffs of all the commissioners, as well as the division and your staff, Mr. Chairman, put into this. I would particularly like to thank Peter Calls on my team for going through this and doing some work with the staff, as well as coordinating some issues between the NFA and the SEC to get some thoughtful consideration to some of the provisions that overlap jurisdictions. So I'm very grateful to all of the work that was put into this to get us here. I would also like to echo the comments of Commissioner Benham in thanking Commissioner Berkovitz and Commissioner Stump for their very thoughtful statements. I think this is a time where we all need to reflect on our own commitments and values and understand how we can continue to work to put ourselves in other people's shoes and make sure that we understand the challenges that they face in their daily lives, their perceptions of justice and of safety, while also ensuring that senses of justice and safety are preserved for the broader population in the expression of incredibly legitimate frustrations and in some cases anger. I'm pleased that at least the voices on this call can take a moment and reflect on the situation that we have. And while it's not part of the business agenda, I'm so appreciative to have such thoughtful colleagues that can make those statements at this point and put things so into perspective in such a balanced and meaningful way. So thank you to them, and thank you for your leadership, Mr. Chairman.
Well, this is Chairman Tarbert. Thank you so much, Commissioner Quintens, Benham, Stump, and Berkovitz. I want to echo the points that you have all made. The CFTC plays an important role in at least the economy of the United States and the global financial system more generally. Obviously, the area of our focus is very specialized, but my goal has always been that while we have a sort of a very, some might say even arcane area of expertise, it has a tremendous impact on the rest of the world and certainly on our economy. But at the very least, getting to the larger points, if we can demonstrate that the five of us and the more than 1,000 people that collectively are part of the CFTC, both in terms of our 700 full-time employees as well as our 300 contractors, many of whom have been at the agency for a number of years, if we can show the rest of the country that we can work together, we may not always agree on substantive issues, but we can treat each other in a civil way. We can respect one another. We can work to see if we can achieve the best solutions for the matters that are brought before us. In our small way, the CFTC can be an example, and I'm privileged to have the four of you as colleagues. I'm also privileged to have all of those who support your offices as well as those in the agency more generally. This has been one of the most trying times in American history, certainly recent American history, obviously with the pandemic and the economic turmoil that has created. But I think looking back on the 45 years of our agency, I think people may very well say that in many ways this was our finest hour, that the staff and everyone else rose to the occasion, provided temporary targeted relief, made sure our markets remain orderly and liquid, and in discussing sort of the higher level policy issues, we've done so in a very professional, collegial, bipartisan, and respectful manner. And so I'm so very grateful to be here. And next meeting, which I hope will have another open meeting at the end of this month to continue to do the business of the country and under the Commodity Exchange Act, we will certainly start with the Pledge of Allegiance, even though we're not necessarily together in person. So with that, there being no further business, I would ask if we could go ahead and adjourn the meeting. Those in favor of adjourning the meeting will say aye.
Aye.
Aye. Those opposed, no. The ayes have it, and once again, I'm grateful to everyone at the CFTC for their great work, and all of those who are in our markets or interested in our markets who are watching or listening to this open meeting over the phone or via webcast. Thank you all so very much. This meeting is hereby adjourned.